You have seen the ads. Settle your tax debt for pennies on the dollar. A booming radio voice promises the IRS will wipe out your balance for almost nothing. Some of it is true. Most of it is a trap. Today, I'm going to show you how settling IRS debt truly works, who qualifies, who does not, and how to tell an honest answer from a sales pitch. The real program is called an offer in compromise. It is run by the IRS, not by any company. It lets you pay less than your full balance and walk away clean. It is real. I've used it for thousands of clients, but it works on cold math, not hope. Here is the truth nobody selling you a settlement wants to explain. The IRS does not care how much you owe. They care about one number. They call it reasonable collection potential, or RCP. It is the amount the IRS believes they will collect from you before your debt expires. Your offer has to beat the number. If your RCP is higher than your offer, the IRS says no, every time. So how does the IRS build your RCP? Two pieces. Piece one is the equity in everything you own. The IRS adds up your assets, home equity, car value above what you owe, bank balances, retirement accounts, cash value in life insurance, even tools and equipment. They count it all. Piece two is your future income. The IRS looks at your monthly income and subtracts your allowable living expenses. What is left over each month gets multiplied. For most offers, they multiply it by 12. The result is the income side of your RCP.
Add the two pieces together, the equity in your stuff plus your multiplied monthly leftover. The total is roughly the smallest offer the IRS will accept. Now you see why pennies on the dollar is misleading. If you have $90,000 of equity in your home, no honest settlement makes your debt vanish for $500. The IRS sees the house. But here is the part the ads also hide, and it is good news. Allowable living expenses change everything. When the IRS counts your expenses, they do not use your real spending. They use national and local standards. There is a set allowance for food and clothing, a set allowance for housing in your county, a set allowance for car operating costs. There is room for health insurance, out-of-pocket medical costs, taxes, and certain other necessary expenses. If your allowed expenses eat up almost all of your income, your monthly leftover is small. A small leftover means a small RCP. A small RCP means a low offer the IRS will accept. This is why two people who both owe $70,000 get totally different outcomes. One has a high income, low expenses, and a paid-off house. The IRS wants most of the $70,000. The other has modest income, a family to support, rent, and medical bills. The second person might settle for $4,000. The settlement is not magic. It is your financial picture, scored by the IRS formula. So who is a strong candidate for an offer in compromise? You owe more than you are able to pay before the debt expires. You have little equity in assets. Your income barely covers your allowed living expenses. You have filed all your required returns. You are current on this year's taxes. The last point stops more offers than anything. You must be in full compliance. All returns filed, current year withholding or estimated payments on track. The IRS will not settle with someone still falling behind. Who is a weak candidate? Someone with large equity in a home or retirement account. Someone with strong income and low expenses. Someone able to pay the balance through a normal payment plan before it expires. For those people, an installment agreement or another option fits better. Now, let me warn you about the predatory side, because this is where people lose thousands. A real evaluation starts with your numbers: income, expenses, assets, and equity. Any honest professional runs your RCP before promising anything. If a company promises a settlement before they have seen a single financial detail, walk away. They are selling a dream, not a service. Watch for big upfront fees with vague results. Watch for the phrase pennies on the dollar used as a guarantee. Watch for pressure to sign today. The IRS process takes months. Nobody honest rushes you.
Here is the IRS resource worth knowing about.
In April 2026, the IRS launched a free online tax debt help tool. You answer questions about your finances with no personal information required, and it points you toward options, including whether an offer in compromise might fit. It is a fine starting point. It does not replace running your full numbers, but it costs nothing. Here is your action plan. First, file every missing return. No compliance, no offer. Second, gather your full financial picture, every asset, every debt, and your real monthly income and expenses. Third, run the RCP math honestly. Equity plus multiplied monthly leftover. Fourth, compare the number to your balance. If your RCP is far below what you owe, an offer in compromise is worth pursuing. If it is close to your balance, look at a payment plan instead. The offer in compromise is one of the best tools in the tax code. It changed my clients' lives, but it rewards people who face their numbers, not people who chase a slogan. Settling for less is real. Settling for pennies on a guarantee is a sales pitch. Know the difference, and you will never get scammed.